It should be up and going, preparing to live
We owe a
stream.
thank you to all of the followers who let us hit that 100-person mark so we can actually make that channel legitimate.
Yes, we now have a vanity URL, so you can find us much more easily. And we are now live. So very cool. Well, welcome. Let's see. It's still 2:30 right here on the mark. So I'm just going to greet everyone and let's have everyone introduce themselves. Tim, say hello. Well, actually, Marcel, why don't you say hello? And then Tim, you can say hello and introduce Louis.
Sure.
Hi, everyone. Another day. I can't say in the paradise anymore, right? But another day. I was telling people that I wish that it was raining in California because then that would be like, a good reason to stay indoor. But it's like a beautiful day and then you want to get out, but you can't. So, well, welcome everyone. Happy to be here.
Yeah. It's a special day for me. It is raining here in Marcel, so I'll send you some down from Oregon. Just to have something.
We have plenty.
And yeah, Louis in Portland, so I'm sure it's raining there. It's a special day for me. I get to introduce you to one of my favorite people. I feel very lucky to have Louis in my life helping me through many of the tax issues, financial planning things that I deal with. And not only that, some of my clients and other advice that we give. So I was telling Joel earlier, Louis, before he jumped on, I feel a little bit of professional jealousy sharing you with this group today because you've been like my best kept secret and now I'm giving you away.
Yeah.
But yeah, welcome to the conversation. We appreciate you being here.
Yeah. Thanks. I'm happy to join and I look forward to meeting everyone and answer all the questions and hopefully I can be helpful and shed some light on these crazy times and all this new stuff the Congress and the government is just pushing out.
Louis, tell us real quickly, how do you describe yourself in a sentence? What's your expertise?
Yeah, I'm a tax manager at DeLapp. DeLapp is a medium to large size accounting firm here, and we're in Lake Oswego, but we also have a small office in Portland. I spend most of my time serving and advising technology, creative, and then biotech companies. A lot of times nowadays, technology and creative are very intermingled just because really every creative company is reliant and really intermingled with the tech space. So those two just inevitably have become very related to each other. So that's really kind of where my niche is and my expertise. And I've really enjoyed it. The tech space especially is, it's constantly changing. Every company's different. And I enjoy working with these type of people I think I have most in common with them. And it's a lot more fun than, the older couple who own 17 rentals.
Yeah, right.
There's nothing against that, right? But I like working with and planning with like-minded people.
Well, that way you could be an older couple with 17 units in the future. That's the goal, right?
Yeah, that's the goal, right? We'll work up to that.
So Tim, I think let's do this. First of all, say welcome to everyone that's showing up here live to watch this live stream. Louis, I'm so glad you're here because I'll tee you up maybe, Tim, to take it up from here because yesterday, for everyone's benefit, we started just tackling this question of what is the C.A.R.E.S Act, what's in the Act, how might it benefit firms, especially of creative businesses. And we talked through the concept of what the purpose of the Act is and some of the seeming proposals that might benefit businesses that need relief. But then when we got into some of the specifics and the actual tactics, we very quickly, shall we say, admitted our pay grade and said, we are not tax experts, we are not attorneys. Let's bring in an expert. And so that's why you're here. So Tim, with that maybe background, do you want to take it away and I'll let you and Marcel start the grilling.
Yeah, of course. So Louis, you and I had a few chats offline already. Just and by the way, thanks for taking my message over the weekend. Even with the things that just rolled out, I was being asked the questions, and obviously I'm for my own self and my own business. But the rollout, a big, huge thing that came out over the weekend has a lot of moving parts to it. Can you just give us kind of the 3 or 4 major parts that we should be looking at as business owners? Just keep in mind, most of the business owners here are under the 500 employee mark. We're looking at creative business owners with up to a few dozen people really at top. and you kind of know the makeup, higher end talent as well as junior talent that can get animation and work done, and spread mostly over the United States. Some people are joining us internationally, but with that in mind, what would be a few takeaways and the big sections from the act that came out this weekend?
Yeah, so I think the 3 or 4 kind of biggest ones, especially the ones that everyone is reading about in the news. The first, which was kind of the first one that they kind of pushed out, was the stimulus checks. They call them like the recovery rebate. And those are the individual checks that, each individual taxpayer is going to get. They range from $1,200 for each individual to $2,400 for a couple. And then you get an additional $500 for each qualifying kid. And those are just for everyone. You don't have to be a business owner. It doesn't go to your business. It goes to each individual. There's certain phase outs for people who, make more money. Generally, if you're married and make over 198 grand, you're not going to get anything. So they phase out fairly quickly, but those are kind of the first thing that they really started publicizing in the news, just as the first way to kind of provide relief. It's still unknown really when those are going to be seen. They said they're going to happen in the next 3 weeks, and their goal is to send everything through direct deposit. The next 2 ones are kind of gain recent traction, especially with business owners. The first of which is the Paycheck Protection Program, and that is the forgivable loan that are going to be made through banks and is 100% backed by the government. The next is the EIDL, or the Economic Injury Disaster Relief Program. This one we can kind of circle back on, but this is the one that I think requires the most immediate attention, just because it's the quickest way to get funds from the government, which can also be forgiven. And then the last is just all these different types of payroll tax credit relief. So there's different credits you can apply for on your payroll returns that just provide some relief on the cash flow that would be needed to satisfy your payroll tax liabilities.
So probably for the rest of the conversation we're going to have, we're going to focus on which is the right area to start with your business, and how these things work, and do they kind of subtract each other or move against each other. But just from the very beginning, and to cover this and get it out of the way, the rebate checks that people are going to be getting, do those need to be paid back? Are they going to be taken out of next year's taxes? How does that actually work for a tax planning?
Yep. So, I guess first, just a caveat with all this is there's still a lot of unknown. But at this point, if you get overpaid on your rebate check, we don't anticipate that they'll claw back the excess. Again, that's just the recent understanding. There's no specific guidance stating that, but that's the current understanding. So if they base it on your 2019 tax return, and if you haven't filed 2019, they'll use 2018. And so if you get paid too much based on your 2018 tax return, when they then look at your 2019 tax return, you potentially could have been overpaid, but they won't require you to pay it back, is the current understanding.
But it basically free rebate, right? So when whatever you get back in the future is going to be credited that way. So it's actually your money. If I want people to understand that it's actually your money, you're just getting it ahead of time, getting access to it at a time. And that's the way it worked in 2001 or whatever, when Bush did his whole stimulus package. They just gave us our tax money up front.
Yeah. Technically,
so that's very different.
In 2020.
Yeah. So then that's very different than these forgivable loans, which is actually newfound money. It's money that's the government's going to give you to stimulate your business or retain employees and keep the business going. So let's talk about just the idea of what a forgivable loan means. Does that just mean like they're going to give you cash and you can ignore it? There aren't any payments to be made, or is there like a maintenance to it and it's forgiven at a certain point? How do we understand that term forgivable loan?
Yeah, so it has the opportunity to be forgiven. At a high level, the loan is going to be based on a factor of your payroll, or they define as your payroll costs. And as long as you use that loan over the following 8-week period for things like payroll, mortgage, rent, utilities, then that amount of the loan that you use for those qualifying expenses will not have to be paid back. This only applies to the principal, though. You'll still have to pay the interest.
So, and what documentation do you need to kind of look through your payroll process? Is that just the last payroll information you put out there, or paycheck stubs? What's that gonna look like?
Yeah, that also is kind of up in the air. We think that the banks are going to want to look at your most recent payroll tax returns. So they're going to look at your 941, see what your payroll cost was for the previous 12-month period. So the payroll protection loans are going to be through local banks backed by the government, but the local banks are going to be the ones that are collecting this information to send out the loans. So that's currently, we think they're going to be looking for your payroll tax returns, or if you don't have payroll, if you're playing, a 1099, they're going to ask for copies of your 1099s.
Yeah, sure.
Okay, I have a question, and I want to be a little bit more dummy here, because my thing is actually layers, keyframes, animation. I want to see how, so if you can give me like a brief explanation, if my company would be qualified. I have two questions. If the company, how do I qualify my company to some of these programs, and also like if the owners, the business owners are included, because for example, the way I do my tax returns is based on the profit of the company. So for example, if the government will take a look, they think that I made a lot of money, but no, the money is actually sitting on the bank account for the company.
Right.
It's not my money. So I didn't make all that money, even though that it might show my tax return. So is there a way that I can get qualified for some of this with the incentive, or I don't qualify? How does that work?
Yeah. So I guess the first part of your question is, how do you qualify? Really, at this point, we believe that pretty much every business structure will qualify. So it sounds like maybe you're a sole proprietor or something that doesn't necessarily file a separate business tax return. As long as you have less than 500 employees and you're in business in early 2020, and you can show that you're economically, had a negative impact as a result of this current situation, then you qualify to apply for the loan. How much of that you actually get, depends on each company's specific situation and your net income if you're self-employed, or your payroll costs.
Do they ever look at your, like, for example, let's say that the company has some cash flow, okay? And then I have like a savings account for the business. Let's come up with a number here. Let's say a small studio, and the small studio has like $100,000 in savings, and it's in the savings account. They were not planning to use that. But now with this whole situation, they see themselves in that situation. They're like, okay, I'm going to get that money and fund the business. But at the same time, you don't want to touch that money, because if you burn that money really quick, your company's gone. So even if you have that savings, do you still qualify to apply for these programs or no?
Yeah, it depends on everyone's individual situation, right? I think you could still make an argument that you were negatively impacted, because if it had not been for this situation, you wouldn't have even had to touch your savings. And now you do, or you need to weigh whether you need to use those funds or not. So I don't think it's difficult to make a case that you are being impacted. You'd have to really be planning ahead and being on top of all, the world economics to be like, well, I've fully planned for this and I have good cash flow and I'm not even worried about it. And I don't even know why you'd want to make that argument, right? They're giving forgivable loans. Why would you want to make a case to not get one?
Yeah, Louis, what will it take to qualify? Are we going to just have to show an email of a client that said, hey, we're putting this project on hold? Or do we have to do a comparison year over year, something more complicated? How do we know what the qualifications are?
At this point, it sounds like it's just self-representation to the lenders to show that you have been negatively impacted. I don't, you could show them your financials and show that, your gross receipts is probably dropped by at least 50%. But at this point, it sounds like you're just gonna have to self-certify to the banks. And the point really is to make the barrier to entry low. They want to make people eligible for these things.
So everyone, just for Louis, for everyone else's benefit, if you have a question, we of course invite you to jump in and drop your question in the chat in real time, but also feel free to use the raise your hand feature, and we'll actually bring you in so you can put your question to Louis or one of the rest of us. So we've already gotten a couple of good questions, and one of those was, Tim, this question of what kind of proof do we need that we've been affected? So Louis, it sounds like it's however you've been affected. I don't know that it's so much proof, it's just that you need to have a good, reasonable testimony that you generate yourself saying we've been affected.
Yeah, and that's the current understanding. And with all the banks that I've talked to recently, like, I mean, they're still waiting for a lot of guidance on how they can issue these loans and what all they need. So it's certain that may change as the banks get guidance on how they can issue these loans. But at this point, that's what it sounds like.
So just to clarify something that Marcel asked too, because someone just asked the same thing. Some business owners pay themselves on payroll. Others are taking draws or distributions,
yep.
S corporation, whatever. When it comes to this 2.5 times calculation, is it? Actually, my mind just thought of another thing too. But when calculating the 2.5 times calculation, what's included? Is it only what's run through a payroll processor? Can you put owner draws, and will subcontractors be attached to that 2.5 times?
Yeah. So I can read you the definition, I guess, if it's helpful, but really they're really trying to go after wages and things that are being reported as income. So they define it as payroll costs, which is this other big gray area that we really need them to define. But they say that it includes the sum of payments of any compensation or income to sole proprietor or independent contractor that is a wage or commission or self-employment. So really they're trying to get at things that are taxable. So wages, independent contractors. The draws or S corp distributions, I don't think that they will include that in payroll costs for the 2.5% multiple.
Okay, but then if you have a longtime freelancer that has their own corporation, so they're independent LLC, you should not include them in yours. That person would do their own kind of deduction loss or stimulus with their own LLC.
Right. Yeah, your independent contractor who has their own business set up, they'll apply for their own separate loan, but you may include your expense for their independent contractor services in your calculation, if that makes sense.
Okay. Yep. Hopefully Tim Jones asked that question. So hopefully, Tim, that kind of answers that question for you, because I know a lot of people have been asking that. So let's talk about the term forgivable loan. With your understanding or the global understanding, what will that actually look like for us as we get this stimulus into our checking account and we spend that? What's going to be the criteria for judgment of, did we spend it properly? What's forgivable? And how is it paid back if it's not forgiven?
Yeah. So essentially, I mean, if we kind of break it down at a really high level, you're going to qualify this loan. You'll calculate how much you're eligible for, and then you'll get the funds flowed into your checking account. Once you have that loan originated and it's funded, you have 8 weeks from the origination date to spend that money on eligible costs. The eligible costs include your payroll costs, your health care benefits, mortgage interest, rent, and utilities. They also think you can use it for interest on debt that was previously incurred. As long as you have spent that amount of loan during that 8-week period on those costs, the entire thing is forgiven. You don't have any requirement to pay back the principal. Any portion of that loan that you did not use for those expenses turns into a loan over, I believe it's 10 years. It has a max of 4% interest. The other caveat to it is the whole point of this is to provide funds for payroll. So if you lay off people before you get this funding, you have until June to pay them back or to hire them back on so you can provide their payroll. You also need to maintain the same amount of average employees as you did before the crisis is after. If you don't have the same average, then the proportionate amount of that loan is not forgivable. And obviously there's a lot of details that go into that, but that's kind of the high level thing.
So if I were to think about that, if I ask so I self-certify a loan amount right now. I'm just going to use the $10,000 immediate fund that you can get from the EIDL. And it turns out really about 5,000 of it is qualified expenses. That other 5,000, I can pay it back immediately, or it seems like I can turn that into a 10-year term loan at 4% interest and pay that back slowly. So I can easily cash flow that $5,000 over a 10-year period, which really at that point it's like $500 a year. We're talking at $75 a month, something like that, to get that thing going. There's a part of me that wants people to recognize that a 10-year 4% loan is better than any credit card interest that they're paying. And this is a good time to do debt restructuring within the stimulus as well. And I don't want people to think of like I'm cheating the system. That's how the economy is stimulated. To restructure debt allows you to have accrue future debt at other rates. And that's how new money is brought into our economy. That's the purpose of economic stimuli. So that strategy is actually a lot of good strategy put into place and has the intention of what stimulus is about. But I feel like most people think of it as a bailout because there are some more critical issues than long-term restructuring. But as a business owner, you want to be very business savvy with the opportunities and purpose that's laid out. Marcel, do you have another question?
No, I feel like, there are certain things that everyone is trying to understand. I would love to bring some of the people here to the conversation. I feel like Justin Andrews, he has a great question here. Maybe we should bring him to the conversation. Justin, can you just raise your hand and then we can put you here with us.
There, Mr. Justin, see if you can join us. There we go.
Yeah.
Marcel, I'll chat with him and unmute.
Cool.
Hey, Justin. Welcome to the show.
Hey, guys.
Hey, Justin. All right, Marcel, take it away.
Yeah, well, he had a great question here. Is it worth to tap into loans or payroll loan, even if we have enough cash for the next 6 months? We aren't planning to do anything at the moment because we don't want any interest or to go through too much paperwork.
Yeah, I can kind of speak to that a little bit more, and maybe that will help. But I think my question was answered roughly. Like, obviously, Tim's point of restructuring any debt, which we actually don't carry any debt as a business. But yeah, 4% would be great if we did. But then the other point, just trying to understand whether it truly is forgivable on those employee expenses or payroll expenses, or is it payroll expenses, or is it just the tax associated with those payroll expenses? Is it rent? Is it truly those things, or is it that stuff is just going to become deferred? So just trying to understand if it truly is going to be forgivable, because obviously that makes it a lot more appealing, but also if we're a business that doesn't necessarily need it right now, realizing that there are plenty of businesses that do need it and not wanting to necessarily get in the way of those businesses either.
Yeah, so I think to answer the first part of it, the forgivable piece includes things like rent and utilities and mortgage. So if you don't anticipate having significant payroll in the next 8 weeks, but you'll still have rent and those type of things, there's no harm in applying for it and getting it if you think you'll use it for those type of expenses. And even if there's an unpaid piece, like Tim said, and then the rest of the loan is, 4%. So it's really not, it's a pretty good rate. And then the second piece, whether you're taking it away from other companies or not, it's, that's kind of up to your own personal philosophy. It's the intent for this thing is to put money out into the economy and to make it be available to companies. So if that's the intent and you feel it can help your business, then that.
Can I say something real quick? I feel like some of us, some of the questions that I've been seeing is because of timing, so you have to use the money within 8 weeks. But if you get some of these companies, they are healthy for the next couple of weeks, probably a couple of months. And I think probably these companies are thinking how to be proactive with the money, not for the next 2 to 3 months. It's actually, I have a feeling that, we're going to see the ripple effect of this whole thing in maybe 9 months ahead, So maybe this is a chance, and I want your guys' opinion as an expert. If maybe that's the time when you save you get your savings, don't touch that, and then you get involved on the loan to fund your business now, so you can stretch yourself a little longer.
Right.
Because I feel like the problem, like right now, we're still like some of the companies, they still have money from marketing that they can spend. They still have, something that they can play with, but we don't know what's going to happen. And like, I've been talking to clients now that they don't even know if they're going to have their jobs, in like 6 months. So I don't think the problem is now. I feel like the problem is actually like later. That's why that timing of the 8 weeks is a little scary for some of the business owners.
Yeah. I think you just need to look at your cash burn and your runway. I mean, if you think there's a great chance a lot of these companies are, their revenue and their receipts are dropping, going down 50%. So you may have enough cash for the next 6 months, but yeah, like you said, you need to look at beyond that. Providing a loan that you use in the next 8 weeks may be able your company to survive and pay your employees and put food on the table, and maybe make it through the rest of the year.
Yeah. I've been guys. My wife is in corporate finance, so she's reading stuff for me right now and sort of just double checking everything. But no, I think the impact is like more, we can weather the storm right now, but how is this going to impact us,
Right.
6 months from now? So thank you.
Yeah, thanks, Justin, for the question. Louis, I've been really working with business owners to think through that you still have to make good business decisions. If your clients are canceling large projects on you and you don't know the upside of it, you have to still be smart of what that burn rate is. The stimulus seems to be saying, hey, if you keep employees going, we will give you the money to make that happen, which is great. You might have to cash flow those payrolls in the meantime. So you're removing your ability in the future to have that cash available. And so like you're saying, Marcel, if you can get these things right sized and get the stimulus money in first, keep your savings account. In the future, you can always use your savings account to pay back that loan. Someone asked if there's a prepayment penalty. My understanding, there aren't any prepayment penalties for these loans. So you can take your cash out later and cover the principal. But if not, it allows you to stretch that timeline out. And as other decisions being made, Marcel, 3, 4, 5 months from now, you'll still be in a strong position there. So still be good and smart when it comes to business and business decisions.
Yeah, cool.
Joel, do we have another question?
I was actually just going to mention to everyone that we normally have a half hour for this briefing, but today we said let's spend a full hour because we knew there would be a lot of questions. And Louis, I think you were gracious enough to, or enough of a sucker to say, I'll spend an hour with you guys. So please feel free just to keep the questions coming, and feel free to keep raising your hand. But we do have a few other questions here on the list. Let me get to this one here, which I saw from Brent. He was saying, what should be included in the cost of goods sold section? As a motion studio, we don't officially have costs of goods sold. Would that include contractors?
Sorry, one second. I'm just rereading the question.
It's on the application, Louis, when it asks you some basic things.
Oh,
hey,
yeah.
What would
Sorry, could you hear me? My thing froze for a second.
I just sent you the question, Louis.
Okay, thanks.
Direct to you.
Yeah, so I mean, cost of goods sold, you generally don't have cost of goods sold if you're a service company. So if you don't have inventory and you're not producing a physical product, you don't generally have cost of goods sold. It really is just a presentation item. If you do normally report cost of goods sold, and as a cost of producing your product, you pay independent contractors, then yeah, I would probably include that in there as a cost of labor.
Yeah, and freelance labor or kind of a subcontractor labor is usually what people put in there.
Yeah.
I'm losing some internet, so I'm going to go off camera for a second. But the question I want to answer is one from John, and he asked the question. He laid off his only employee on March 23rd. He is now the owner of a S Corp. Can he himself go on unemployment?
Yeah, I believe so.
Okay. Yeah, I don't think people know that. Usually you feel like, oh, I don't pay myself through payroll, therefore do I qualify for unemployment? But you can't unemploy yourself.
Right. Yeah, and he would certainly need to look at the rules for his individual state.
Another person's asking similar, but like, can they file as an employee of an S Corp, therefore be unemployed, as well as file as the S Corp for an SBA loan? Can they be an individual and a business owner?
I don't believe so. You would just be applying for the loan as the S Corp at the entity level, because the loan is based on the payroll costs that are paid by the entity. As just an individual, you don't personally pay payroll, it's paid by the company.
Yeah, cool. I guess one of the other questions I see coming up is, what if you have more than one entity? So some people, for example, you might be the renter of your own building.
Yeah.
So do you apply for both LLCs, the one that's the corporation that's renting the building and that problem, as well as the landlord and the need for the mortgage in those areas as well?
I think you got to look at which company would be using the funds. I think if you have an LLC that just holds the building, I guess you could use the loan for your mortgage payments, but I would doubt you'd have much self-employment earnings, because normally those type of entities, they kick off so much depreciation that they don't usually operate at a profit. So then you might not be eligible for the loan.
Okay.
So my hunch would be to first look at the entity that's paying rent.
Yeah, sure. And I know some live action crews groups have, like, the director has one LLC, and then the equipment and rental and production side has a different LLC.
Yeah.
In that case, they might want to look at both.
Yeah.
And each one would be hit separately with different needs. The key is you can't make the same claim twice. So you can't claim yourself as an employee and then go off and say as an individual in any of these situations and double dip on that money.
Right.
In this case, it sounds like if you did, it would basically you'd choose one entity or the other to get the forgivable part of it, and the other would carry on as a loan, as we've been saying. But that's the key there.
Hey, Louis, I have a quick question for you, and that's like the dummy question, So for people who are not familiar about how to apply to these loans, what's the best, what's the simple way to start this? Do they go to their CPA? Do they go to the bank? How does that actually, what's the procedure here? What's the fastest way to get this going?
Yeah, so that's a great question, and actually brings up something that I think is important that people take away. So briefly earlier, we talked about kind of the two main loans that have really been publicized, the Paycheck Protection, and then the EIDL, which is the disaster relief one. So the Paycheck Protection Program is going to be issued through local banks. So to apply for that one, I would connect with your local banker, and I'd start the conversation now. We think they're going to start accepting the applications, probably this week, but those have to be issued through your local bank. Most banks say that they're not going to accept it from people who aren't current banking customers. So for the PPP, I would connect with your banker now and see how you can get started with that. The EIDL is actually funded straight through the SBA, and that one is active right now. So you can go on the SBA website and apply for that. And you can actually get a $10,000 grant up front, and they say they'll fund it within 3 business days. So I mean, if you think you can use the funds, I would go and do that one right now.
Nice.
And that $10,000 is an immediate hit. You can apply right now online.
Mm-hmm.
Supposedly it's coming in the next few days. I've heard different people tell me they haven't yet got it yet, but it sounds, and it's self-qualified. So if you say you need it, it shows up. Yeah, go ahead, Phil.
You guys, I'm going to just jump in real quick because I think there's a killer question here from Kendra. Hey, Kendra, do you mind raising your hand? Could you maybe join us and ask that question? Because I think it's very relevant, very timely. There you are. Awesome. Hang on. Let me chat and allow to talk. All right. Are you there, Kendra?
Yes. Hi.
Hello,
Hi,
Kendra.
Can
Good
you
to hear from you.
can you see me or just hear me?
We can just hear you. I don't know.
Okay.
For some reason, in this Zoom, we can only hear folks. But your question was awesome. So if you don't mind, just jump right into it.
Yeah, and it's not it's kind of a question. So yeah, apologies. I missed the first part of the session today because we're a private client at C.A.R.E.S, and our banker, who I talked to last week about everything, just called me back, and I was kind of running through what they're doing with him. So he said that Chase is still preparing all of the applications for any clients who are going to apply for the payment protection loan, which I think is the one that you guys are talking about. They don't know when they're going to be ready with that for people. But he did say, this is kind of what gave me pause or made me freak out a little bit, was he was like, I think they're first come, first serve. So what that meant to me is like that money could run out if everybody is just massively applying all at once through whatever banks. Does that make sense?
Yeah, Louis, do you have any thoughts on that?
Yeah, I mean, I think it's certainly a possibility. They allocated, I think, 350 billion maybe to the PPP. So if all of those get distributed through the banks and there's nothing left that was allocated through the stimulus package, then I suppose it could run out. I don't know if there's any priority or anything going through the banks. So I guess first come, first serve makes it the most fair.
He also said, I mean, this is just, if this is helpful to people, I mean, he said that they aren't able to do, they only are able to process the loans for clients who are already clients of Chase before March 1st. So I don't know if that's helpful to anybody. But yeah.
It's the same conversation you had earlier, Louis, too, with some of the banks where some banks are requiring you to be already existing clients. Other banks aren't even going to do the program at all. So it might be tricky in finding a lender. What are your thoughts on what's going to be available like open market if your bank's not doing it or you can't get into your bank? Will there be brokers or allowance for brokers to help people?
Yeah, I mean, I'm hoping that there's some sort of market available for smaller banks or other funds to be able to grant these things. But at this point, we just don't know. I think that's why it's important to just be connecting with your banker now. And so you have an idea. If they're not doing it, then you can start shopping around or at least get an application to start with another bank.
So let's focus on something right now for the next, to conclude this, because I think a lot of the questions that we've heard, by the way, Kendra, thank you for that question. A lot of questions that we've been asked really is which one, or let's say like, where do I start? How do I start building out a plan or a program to get these applications out there? What does one, if I apply for one, does it disqualify me from the other? So where are you starting with clients, and how would you recommend beginning at your own kind of stimulus outreach program?
Yeah, so we are recommending you, I mean, if you think you can use the funds to apply for the EIDL right away and at least get the $10,000 up front, assuming you can use the funds and you can make it forgiven, there's no reason not to apply for that. And then as soon as possible, again, if you qualify and need the funds to apply for the PPP, we're also kind of weighing the benefit of those two compared to the employee retention credit. If you do, one of the forgivable loan programs, you cannot do the employee retention credit. The credit is a credit on your payroll taxes for half the wages paid over a certain period. We're kind of weighing those two to see really which is more favorable to companies. In most cases so far, the loans have been more favorable just because you can get more cash. It's better cash flow.
And the forgivable loan part of it is if you get the money up front and then you basically have to justify that you had certain expenses during that 8-week period. If so, that portion of it's forgiven. I'm going to guess there's a term at which you would pay this back and would apply for that forgiveness, and the rest of it would carry over. If your bank right now, I'm sorry, actually this was a question. The bank is good for the PPP, and then the EIDL is straight with the SBA, right?
Yep. Yeah, correct.
And that's right now that feels like it's an online application. Is there any face-to-face or other resources for the SBA to help people fill this stuff out, answer questions, help get their own application processed?
Yeah, the SBA website, I think, is actually pretty helpful. There's a lot of resources on there. I don't think there's any face-to-face that I'm aware of for the SBA piece, but in the application, from what I have understood for the EIDL is fairly straightforward and can be done fairly quickly.
Okay. Yeah, it seems like I might be wrong here, but it feels like late last week the EIDL was it was a longer process. It seemed like you had to apply for it, upload documents. The questionnaire was very difficult. And then yesterday morning when the application came out, it was 5 or 6 questions and asked you two of those questions were what's your bank account and routing number.
Yeah.
So is that possible? It actually changed over the weekend?
Yeah, certainly. This is a constantly evolving thing, and the procedures and mechanics of it are constantly changing. So I think so. And that was my current understanding, was that it was easier. That's what I had heard from most clients, was that it really wasn't that time consuming. So that must be the current reality of it. And hopefully it stays that way, right?
And we posted that link in the chat for people on this call earlier on. Ethan can post it again so that people can find that link for the SBA. Joel, did you have a question?
Yeah, I just noticed 2 questions here in the thread that are somewhat related, and we've kind of covered this, but I know people keep coming back to, hey, maybe we've answered this already, but just in case. One was Daniel was asking, as owners of an LLC, we take distributions and don't go through payroll. So do we still qualify for PPP even though we're not technically employees? Might just be good to reiterate that in case somebody missed that before. And then also, while I'm at it, let me ask this one. Jed was asking, if you're the owner and sole employee of an S Corp and you do pay yourself through payroll, does the 100K limit mean your payroll is not eligible for the loan, or just that the cap is 100K salary that's prorated, that sort of a thing? Louis, do you have maybe a quick recap of those 2 points?
Yes, the second question, my understanding is capped at 100K. So when you're calculating the payroll cost multiple, you can only include payroll for each employee up to $100,000. And then I believe your first question was about the LLCs, right?
Yeah, it was, if we don't go through payroll, do we still qualify? I think what you said earlier was you were emphasizing essentially if it's compensation, then it qualifies, but you want to make sure I'm not speaking out of turn there.
Yeah, and that's another big gray area right now that I think they really need to further define, because they just have this broad definition of payroll costs, and it doesn't really go into the LLCs or the self-employed people who don't have W-2 wages, because by law they can't be employees as LLC owners. So I think the intent is to use what they define as like your net earnings or your self-employment earnings for the calculation.
Yeah.
So I think the intent is for them to be included, but again, that's something that still needs to be further defined.
Yeah, maybe the encouragement to everyone is let's assume that because the intent is to help not only your employees stay on your payroll, but for you to stay on your payroll, that I would proceed with that understanding until we find something that confirms that is not the case.
Yeah.
Okay. Yeah, that's helpful. Let me just check and see. I think there was another thing here. Bill was asking, but just for clarity, can we apply for both the EIDL and PPP? The only thing it excludes us from is the employee retention credit, ?
Correct. You can apply for both the EIDL and the PPP. Just if you do one of those, you cannot do the employee retention credit. And I think the interesting piece about the EIDL is the main difference between that and the PPP is the EIDL on the surface isn't quite as forgivable as the PPP. The PPP is, is advertised as a forgivable loan. Only the upfront 10K of the EIDL is forgivable. However, the rest of the EIDL that you say get approved for, you can refinance that through a PPP and get it forgiven. So really it can be forgiven as well, but it just takes a little more work.
Because I know, Marcel, this is probably on your mind, just for everyone's edification. Can you unpack both of those acronyms just so everyone is reminded again, what's PPP, what's EIDL? Oh, sorry, that was for you. Yeah, that was for you, Louis.
I thought it was a pop quiz for Marcel.
No, I was already thinking about After Effects in 3D. Like PPL, like a null object with masks and stuff.
There's so many abbreviations. So PPP is the Paycheck Protection Program, And then EIDL is the longer mouthful, is the Economic Injury Disaster Loan Program.
Okay, good to know. Also, I was just going to say here that Mark was asking a question about COGS, cost of goods sold, and we did cover that earlier. So Mark, you might want to go back and watch if you missed that in the beginning. But for the most part, the question here was, do travel expenses and gear and rental software, et cetera, count towards COGS? And I would generally say no, that those are not. Well, you had a better definition, Louis, that if you produce like a tangible good, then that's a COGS. But if those things that Mark are describing are really just business expenses.
Yeah, the kind of classifying COGS, it really depends on each business. I would ask, your CPA or look how your previous tax return was done. If those things were included in cost of goods sold, it couldn't hurt to be consistent with the application. Generally some of those things sound more like overhead,
Right.
Probably would go more below the line. And by that, I mean, not cost of goods sold. Gear purchases, if those things are required to produce your product, then yeah, it couldn't hurt. It's not uncommon to have that in cost of goods sold.
Tim, do you want to chime in on that? Because I would say for the most part, we would say with like a live action production company that those types of business expenses are just that. They're business expenses, not COGS.
Yeah, and it's almost the same trick that some companies, they go around the meal issue when they do catered meals on set. That's a cost of goods sold opposed to business expense. So it's really something that the structure of your business and type of service you provide, clearly there are expenses necessary to produce your product. That's a cost of goods sold. Others are overhead items that you have sitting in your local refrigerator for your own employees to drink. That's a below the line item, as you said. So it will be business by business. I like your advice, Louis, which is really just be consistent with the way you've filed over the last few years. That's going to be the best indicator for you. And most likely it will be the documentation people will look for in the future for the forgivable part or qualifying part.
Here's a question that Diana tossed out, which I think is a good one. And I'm not familiar with this, so maybe Louis, you know something about this. But she asked, last week on SBA, they had a bridge loan for $25,000. Is the $10,000 loan the same thing now or different? Do you know anything about that?
I'm not quite as familiar with the bridge loan, but my last understanding is that was something totally different. I think that's a different loan program.
Okay, probably something different.
But everything is changing so fast, so it certainly could have morphed into the same thing.
Tim, I have a question here for you. How you and probably and Louis can, help people to determine which kind of program that they need? Is there something you guys can do together to sort of help people to say, okay, this might be better for you, or you might need this one, so how can you guys work and, help our fellows here to understand that?
Yeah, first of all, thanks for the question. First of all, Louis, I'd say education is the key, and that's probably the best thing we can do right now. A lot of these programs haven't rolled out yet, so I know that many of us feel the pressure to get into the first, the first offering of the PPP. Marcel, I think you just mentioned that you got an email from Chase. It seems like Chase just did a mass email to everybody in the last 5 minutes of how the program's going to work.
Got the email.
Yeah,
I'm reading that now.
So right now, I'd say education is the biggest part of it. I'm happy to be a resource at RevThink. Louis is happy to be a resource at DLAP and many others that are out there. We're just posting as we can. But Louis, what's the process going to be for you to kind of process through the system with your clients? Is it going to, do you feel like the industry will kind of take advantage of this? Do you think it's going to be like our tax returns where you have to set up the 1 hour appointment and get things going? Or is this something that can be handled in a mass mailing and people can just simply do it online and start submitting it?
Yeah, my hope is that everything can just be done online. I mean, the goal is to provide stimulus and money into the economy. So I hope people can do it without having to go, see their bankers, see their CPA, especially with, the social distancing. Nobody wants to go to their bank. I haven't been in my office in 2 weeks. So nobody wants to come hang out with their CPA, right? So I mean, my hope is that it can be pushed out and these things can be done quickly and they can fund the economy. at the very least, people can start applying for the EIDL and can get a 10 grand advance hopefully soon.
And then for between us, what we've been doing, and I think is important, is you kind of stack your strategic partners. So your business owners, your CPA, your bankers, whatever, get them all on the same page so they're talking to each other and working out the same process. I've been having a lot of meetings with 4 or 5 people, just walking through what would the next step be, delegating out that work, and make sure we're all on the same page, collecting the information, what's necessary. But I do feel like there's like a few maybe decision points to make beforehand, and you want to get as much education as possible and make those decisions. But Louis, you said up front, and I this is what kind of the summary of many of the conversations we've had on this daily briefing is. A lot of decisions we have to make right now are cash flow based. So we have to be thinking about what you really need for the next 8 weeks. And then to Marcel's point earlier, what you might need on the other side of this 8 weeks. What's it going to take to actually reboot business or to get things started again? So it's not just an 8-week like vacation you're trying to finance here. You need to actually go into this with some entrepreneurial effort and know that there's going to be a lot of moving pieces as we come out of this this shutdown that you're gonna have to take into account too, and you have to cash flow that as well. I don't think that's going to be forgivable. There's no one I don't imagine there's gonna be an application of like, well, was it hard when you got back to work? Okay, here's some more money.
Yeah, no question.
I wish it was.
Something that I'm trying to not read the news as much myself, just to keep me motivated. But I want to say something. So the way, and this is pretty much my point of view, right? And then based on things that I've been seeing on and off, it seems like that this whole, until we get a medicine or a vaccine or whatever for this problem that we're seeing, these like quarantines will come in waves, like for example, we would get this one that is pretty hard and then we go back. And then if there's another like surge and then we all go back again, work from home. So to me, the biggest takeaway from this talk is like, there are programs that we're seeing now that we can benefit from, but it's pretty much like from a financial standpoint, it's actually how can you stretch yourself as much as you can so you can stay active in business, even through like this roller coaster that we're going to face, right? Yeah. I'm wondering if you have an opinion about that, because this is how I'm seeing. I can't wait to go back to my office and like work with everyone, but I can see that this is going to be like a roller coaster. We're going to have like, okay, we go back to the office. Ooh, go back, work from home. There's another surge, and then we'll be surfing this sort of like wave. So to me, it's like, how can we be smart about these programs and actually the cash flow? And if you have any, thoughts on that.
Yeah, I'll start with, I'm not going to have my beliefs exercised too much in this process, but I have a lot of concerns on what this decision was and how it's affecting us in great ways. But specifically with the question you're asking is, you're right. There's something about ready to happen here that I'm going to turn off my camera so that my bandwidth is safe. There's something about ready to happen here where that we've just asked the government to protect us in 2 ways. You protect our health and make everybody go inside. And in that case, I think we're even stretching our health, our mental health compared to our physical health. Do that for us and crack down on any observers that are not following the guidelines, as well as can you bail us out financially when this happens? In reality, we can't do this every year. We can't have a $2 trillion a year budget that just finances every time we shut down every 2 years. So we're going to learn something through this process. Some of what you're going to learn personally as a business owner might be like efficiencies of working from home. And we might have new policies in place or insurance policies in place to get us through downturns like this. But I imagine it being more really on a company by company basis and not on a global basis like this in the future. So I would expect and plan for something like that. I would also expect employees to not want to return to work in the same conditions. You might find that they are going to ask you now, hey, now I've worked from home for 4 months. Can I continue to work from home and only come to work a couple of days a week? So there's going to be some operational changes within our business happening there. But I'd say like pretty much start recognizing as a business owner, this uncertainty is going to be a variable in your future. and your need for cash reserve, build up your company's policies on health and healthcare provision, most likely to carry some future insurance policy, which will be a drain to your cash. Some of these things are going to really kind of hit our margins. So those would be my concerns and my long-term thing. How about you, Lou? What kind of repercussions are you seeing?
Can you repeat kind of that last part? I think you cut out a little bit.
Oh, just other repercussions you might see globally with some of the decisions of like a shutdown like this in the future. How can we plan for that?
Yeah, I think a lot of it is just going to be how quick, or I mean, how long this is going to last, or how quickly people are going to respond and be able to bounce back. This is going to be, another 6 months. It's going to depend on whether companies are really going to be able to survive this, or, whether their cash is going to dry up and they're essentially going to have to start over when it's all done. So it's just kind of the unknown of how this is going to unfold.
Yeah, new risk.
Well, let's see. We should just let everybody know we are just 4 minutes from the end of the hour here. So if you have a final question or a comment, please drop that in here. I'm going to also just toss in this quick one that I think is a good one for you, Louis, because I'm sure after a talk like this, people are going to be blowing you up on LinkedIn and reaching out to you. And that may be great. That may not be. So I'm going to ask Diana's question. She said, if we have an accountant, is this something they can help us with, or would that be an extra charge to get their help on this process? What are your thoughts?
I would at least start the conversation with your accountant. Because they can at least, connect you with your banker. Or at the very least, it's always good to wrap in your CPA with these conversations, just so you have your whole team on board. I don't think most CPAs are going to be charging, extra or over the top fees to help facilitate this. It's a rough time for everybody, right? But I would at least, start the conversation there and with your banker to at least, get these things moving and have everyone on the same page and know what the next steps, and like Tim said, who's doing what and how to get these things done.
Well, that's great. Thank you for that advice. All right. Well, I'm going to say this on behalf of everyone here that's been part of the live stream. Thank you so much, Louis. It's great to get the voice of someone who's really an expert and can give us some of the nitty-gritty details and answers on this program and all the different, obviously navigating the bits and pieces and odds and ends to see if we qualify for it, if it's going to help our business, if it's not appropriate. So everyone here, please give Louis a shout out and tell him thank you. And then I'm going to hand it to you, Marcel, to, well, first, Louis, you give us your goodbye for the day, and then we can pass it off to Marcel and then Tim.
I just want to say thank you. Thanks for having me. This has been fun. You guys are a fun bunch. And as you guys said, if there's any questions, feel free to email me or contact me. I'm always happy to help or answer any questions.
You're awesome. Okay, Marcel. Say goodbyes for the day.
Yeah, no, thank you so much, Louis, for, dedicating your time. I know we're all like trying to, juggling between like calls and family and all that. I just want to say thank you. This is great for, great information for everyone. I'll probably reach out myself to you just to get some info, but just want to say thank you. Thank you so much.
Yep, happy to help.
And Louis, can't appreciate enough for taking my phone calls, even when they're random, like, hey, want to join us and 50 other people. I did share your email with everyone on the channel here. Email. We'll also put that on our Slack channel into the finance portion. So if you're listening to this later and you want to get that information, we'll repost that there in the Slack channel. We also did record this on YouTube live, and I believe the replay will be almost immediately available. So if there's something you missed, you came in late, feel free to join us over there on the YouTube channel and do the replay. And if you're only listening to us on podcasts, Louis does not look like a square CPA guy. I made him dress up nice and remove those really thick glasses for the day.
Yeah. I hit my 10 key. It doesn't help that all the barbershops closed immediately before the shutdown. So I got
oh, you and me both, brother. I'm like, I can't figure this thing out.
What caveman going? Yeah.
Yeah. But thank you so much for being part of it. And blessings to you all. We thank you for listening to us every day, be part of our community and experience. Make sure you share with one another what you've learned here, be part of this group and community with one another. And we'll catch you again tomorrow as we probably continue the conversation about the C.A.R.E.S Act, as well as some of other leadership questions we've been hit with the last couple of days. So Blessings to you all, and see you tomorrow. Thank you.
Thank you, everyone.
Thanks.
Bye, everyone.